Metair has returned to profitability. The energy storage and automotive components manufacturer has cited the performance of its Hesto business as one of the reasons behind the group's recovery. Dowling Lachela spoke to CEO of Metair, Paul O'Flaherty, for a closer look at the company's annual numbers. Let's have a listen.
There's definitely been a recovery in the last 6 months with a focus on Metair of specific issues. The one being in the harnesses business, where Metair lost money in the first half but turned that around in the second half. And the second, in the Turkish operations, is just making sure that there was some stability in the second half of the year. That being said, some of the other South African operations performed really well in automotive components and really focused on what they needed to do. So we obviously we're happy that we've turned around from the previous year's loss, but we have a way to go. We've still got a lot of fix that we need to do, and that will determine where we end up and our future.
That brings me to my next question, Paul. I want us to touch on the Hesto business as well as your unit in Turkey. Let's start off with Hesto. As you mentioned, it's recovered from the last 6 months, posting profit on that front, as well as revenue there almost tripled. Well, would you say that the troubles are over on that end and that the loss in the first half was just a short-term risk?
No, I think these projects these are very bespoke projects we entered into with the OEMs, the automotive companies, and they're long-term projects. So an automotive company will want us to build the harness for the next 8 or 9 years on a specific model. And so you are in partnership with them to do this. So these are long-term projects where you need to make sure you return the profitability and the cash flows that the stakeholders expect, and continually work with those customers and our technical partners to get that done. So we had a bad start on a particular model. We've recovered from that, but we've got a way to go, and we still really need to stabilize that business. It's incurred a lot of debt for us, and that our primary issue in the business is it now needs to return the cash flows so we can fund the debt that's been incurred in that business.
Let's now take a look at your operations in Turkey. Now, that environment is not particularly one for sissies, issues around hyperinflation, and there's been other factors that led to fall in profits in Mutlu. Paul, how are you navigating doing business in that environment, and what are your plans when it comes to turning around that business on that front?
So the first issue that we have addressed and in the process of addressing is make sure that the management of that operation are stable and the management of that operation are focused on what they need to do, and that is making sure they run at capacity and they find avenues for the loss of exports that they had last year. So they had sanctions on Russia and they couldn't sell into Russia, and so they need to look for so we really focused on making sure they are stable and they get done what needs to get done. But as you say, inflation rates of 65%, interest rates of more than 40%, very difficult to understand where that's going. They've also got elections coming up. And so we have appointed advisors to look at our options around this business. But you need to have a really stable, commercial, viable business and then look at our options. And that's what we're busy doing. We're hoping to bring some options to the board in May, and then take a decision with the board as to what we need to do to unlock value. Now, that could be selling the business, it could be selling some of the valuable property within the business, but we will come up with proper options for the board.
And those 2 units contributing to those high peak debt levels, which sit at around 2.8 billion. Surely these levels make you quite nervous?
Well, if you add the Hesto, we're actually at 4.6. So the gearing is a bit high. We're well within line of our covenants. We need to restructure the debt. We need to make sure the maturity of the debt matches the cash profiles that we're expecting. So it's manageable. We have our funders' full support. That's very important. Our funders fully support this. Our board fully supports of what we got to need to do, and so that's why we're here as management. This is our job. This is what we need to do, and we are focused on this.
Before I let you go, now Metair has had quite a leadership shake-up over the past year, and I'd like to get your thoughts around leadership stability at the company at the moment. Can we confidently say that the group has garnered the execs, people in the board that it needs to sort of turn the company around and poise it for growth?
Yeah. So as you know, the board appointed me from 1st February on a 3-year contract. I've had experience in complicated environments. What we are doing is we are, and obviously I'm joined by my CFO, Anesh, and we are capacitating the head office team because the model of Metair has changed. It previously used to run itself very much investment holding with a very small head office, but when you have massive challenges like we do, we need to capacitate the head office and exercise strategic control, get involved in making sure that the businesses deliver on the cash flows that they've promised so we can properly restructure it. So I believe we've achieved that stability at the head office. We will still capacitate with a few more people. We've appointed, for example, the chief operating officer to help us make sure we're close to the floor of all of the factories. And, we've got a pact. I've got a pact with all the MDs of these businesses. These MDs have been in the automotive industry for more than 30 years. These are very experienced manufacturing directors. And the pact is the KPIs that we've agreed with each other. And that's what they need to deliver on. And we do this as a team effort.
Well, that was CEO of Metair, Paul O'Flaherty.